everyone, and welcome to today's morning report chart appraisals with me, Richard, market analyst at Hantec Markets on Wednesday the 20th of September. It is the Fed FOMC day today, and markets are sort of broadly consolidating with a slight amount of dollar weakness, not a huge amount of direction that we're seeing on markets. And generally what we do see, generally what we do see ahead of the FOMC is a market consolidating, and we've seen that with the equities broadly consolidating, although the DAX has just jumped higher. FTSE's underperforming, and that's come on sterling, which has jumped higher on the back of retail sales. But other than that, we're sort of seeing a slight amount of dollar weakness, but not a huge amount of direction coming ahead of the Fed, just drifting a bit lower on that trade-weighted dollar. And that's coming with these treasury yields, which are basically consolidating slightly lower on the 2-year and the 10-year. Nothing too really in terms of direction. So the market is looking out for the Fed tonight, basically. No rate hike expected, that's a given. Balance sheet reduction is expected to be announced, but it's going to be a very slow and steady balance sheet reduction. So the chances of it creating too much of a storm early doors is fairly limited, really. I think it's going to be more of a longer term situation. And the Fed, I think, or the market will be focused far more tonight on the dot plots from the Fed, the dot plots which have the potential to be downwardly revised, given the concerns over inflation in the States. Inflation has been falling away throughout 2017, and that could pull the dot plots lower, ultimately, with a number of doves on the Fed voting FOMC seemingly sort of moving a bit more concerningly about inflation. And it'll be interesting to see how the dot plots pan out, but that could be the mover of the markets tonight. Also look at inflation expectations. What would be the impact of the hurricanes, but also on economic growth as well. So lots of factors actually to still look out for from the Fed tonight. In front of that, we do have, as I said, we've had UK retail sales much better than expected, 1% on the retail ex-fuel on the month, and year on year 2.8%. And also an upward revision of that to 1.7% as well. So strong numbers coming out from retail sales for the UK. So looking positive again. We've also got to look forward to the existing home sales, expected to be slightly higher, percentage change of 0.3% higher to 546. And then we're also looking at the EIA crude oil stocks, 3 million barrels of build, still sort of impacted by that. By the hurricanes, but also distillates 1.7% draw, and 1.7 million barrels draw and 2 million barrels of gasoline draw. So watch out for those. It was certainly the gasoline drawdown last week that drove the market higher ultimately. And then obviously the Fed at 7 o'clock tonight. Now what we have got is my chart of the day, which is Euro Sterling. Now I did Euro Sterling last night as we were looking to see a bit of stability following on from the sharp downward move on Euro Sterling as sterling significantly strengthened on the back of the hawkish MPC, the Hawkish Bank of England. But we've had two positive candles, but today's candle looks to be turning back lower again. I said that the move back above 88.50 was a positive move, and I'll show you 88.50, which was that sort of old key pivot. Breaking back above that was seen as a positive. However, you've sort of dropped away again today on that retail sales data. But ultimately, look at this: the big long-term uptrend on Euro Sterling comes in just underneath where we found support on that big corrective move. And you've also got the 87.40 pivot as well, holding above that. So we are starting to find a situation where you could develop a basis of support now on the near to medium term. Yes, obviously we've dropped away on those retail sales numbers, but near to medium term, that support at 87.72 that we saw last Friday could start to become a key low. Now, what you'd be looking out for would be a higher low above that, 87.72. So a high low above 87.72, sort of maintaining that uptrend, maintaining the sort of pivot support at 87.40. And looking to start to form support again. You look at the momentum indicators, the RSI has crossed back above 30, arguably a buy signal. You've got the stochastics which have crossed higher as well. Not confirmed yet as a buy signal though, but still improvement nonetheless. So this little sort of corrective candle that we've had today on the back of that retail sales data, if that starts to form support, 88.25 seems to be today's low, and the market has bounced from that, started to find a bit of a low again. So it'll be interesting to see if the market can break above 89 figure. That is your near-term resistance. Again, that would reopen 90 figure, which is broadly speaking again a basis of pivot in the last month or so, and also clearly a big round number level as well. So yeah, 89 figure is the resistance, and a move back above that would arguably, I suppose, complete a base pattern as well. So that would be the number to look out for. 88.25 initially the reaction low from this morning. Can that start to now form as a higher low? You've got the momentum indicators, which arguably on the hourly chart are more positively configured than they've been since that selling pressure began. Certainly the RSI moving up above 70 reflects that. MACD lines more positive. So if that support can start to build 88.25, we might start to see this as a bit of a turnaround play. But obviously the initial move lower on that retail sales data. But as I said, it'll be interesting to see if that continues today. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.